Good day, traders. Stacy Burke from Stacy Burke Trading, and today reviewing a gold trade, also taking a look at the other instruments on the news release of CPI, but coming back to just understanding setups versus trying to trade moves or guess directions. We had news catalyst potential on the calendar. 8:30 a.m. New York was the CPI release. Yesterday was Monday, our day one. We already reviewed this yesterday. We talked about last week coming out of Wednesday's peak formation reversal. And that formed our day one on the way back up. So again, whenever we have a daily high taken out after a peak formation low, we talked about the break in structure on Wednesday and then the reversal in the US session on day 3 down at the low of the week, which began our move back. And so Thursday was our day one longs. So I had a trader mention yesterday, does it even matter on Monday high of the week? And it matters to me. It matters to me in my process and in my approach to the markets. We had day one longs in on Thursday, and we had day two longs in on Friday. So we had higher lows, higher highs, and higher lows. And then on Monday, we continued that triggering of longs into the market. So we had day 3 longs into the market and then a reversal that held above the peak formation lows of the US session until Tuesday's Asian session, where they took out the lows of London. Down in level 1, again, you'll notice they came and went sideways down in level 1 before reversing and coming back up through the high of the day in our Europe-London window. Now, we had news on the calendar, but more importantly, we have day 2. After 3 levels of rise, we have a peak formation above Friday's high. I have no idea where the news is going. I have no idea what's going to happen, but as you've heard me say over and over and over again, I do not trade the news. I don't try to worry about where it's going to go. I'm not even concerned about it, but what I do want to know is where's my high and my low. There's my high and my low of the week. We have a high and a low. We have peak formations. We have a break in structure on the inside now. And then we have 3 levels of rise. So for the traders, again, who have told me that levels of rise and fall are irrelevant, that's fine. It's irrelevant to you. It's relevant to me. We have 3 levels of rise heading into the news. I have no idea what the news is going to do, but we get an explosive breakout. Now, coming back to knowing where the previous week's levels are, when this market breaks out strongly, I will tell you with absolute certainty, when we come off the high of the day, the high of the week inside of the peak formation, I will never counter trend this move. Now, looking back, we have the low of the month down underneath of September 6th. Sorry, so we'll go September 1st. We have lows down at September 6th and September 1st. We have higher intraday lows in that lower 100 pip box. I have no idea where this market could continue. It could continue to fall. I've seen gold, oil, S&P, NASDAQ. This thing could go another 250 pips. I have no idea. But knowing that we have this strong breakout, the first thing that I'm going to look for, as I have mentioned in several videos, is the first bounce. For 15 minutes, I'll let that market trade, but I will watch for a follow-through opportunity, either coming off major round numbers, or as we see after the first 15 minutes, 3 pushes and a 1, 2, 3. The next 15-minute bar opens with an engulfment, taking out the 1, 2, 3. Now again, I have no idea what this market's going to do, but it's a 1-bar stop, positioning myself into the market that 1 bar. My thesis is that this momentum is going to carry through and take out the low-hanging fruit of all the higher lows from the previous week, but also knowing that as we get towards the end of that hour, that this market may proceed for a 15-minute cycle at the beginning of the hour to trigger breakout traders on the hourly charts. When they trigger that hourly low, that breaks hourly traders into the market. So we now get the next hour of traders into the market. When they break this low, the hourly low is just underneath. I'll bring this up. That little consolidation right in here. So we have hourly traders in the market now. We could end up going down for 3 hours, 1 hour, 2 hours, 3 hours. But my thesis is this. I'm in the trade with the follow-through momentum with a news catalyst, but as we get lower down into this level 1 area, I'm happy to take the money off. That's an 85 pip run straight down at the beginning of that new hour. Now this could, as it did, proceed for 15 minutes, false move beginning of the hour, triggering in hourly traders. We might have a 3-hour trade. I have no idea. But that's a no-stress follow-through trade, first bounce after the news. So traders who want to trade the news, there may have been traders who said this is going down, I'm going to sell high. There may be traders who are trying to counter trend this, thinking that this is an uptrend on the 15-minute to go long. I have no thoughts whatsoever regarding that. I am only looking for a first bounce opportunity. If it went vertical through the high and gave us 3 pushes, I would look for a potential reversal opportunity in that second hour. We have the New York Open still coming up in a couple of minutes. This market could continue down for another hour and maybe 2 hours. Or again, trigger hourly lows. New York might open up and push up into this existing short trade. No idea, don't care, done for the day. That's a no stress first bounce follow through after the news catalyst. So understanding where is the low hanging fruit for that market to continue to have fuel to continue to run down. We had our 3 levels of rise, a peak formation on Monday. The market sold off on the news at the high of the week inside the peak formation at double zeros. My trade was merely just the first bounce follow through for that continuation after the news catalyst. First bounce trade after the news. Keep it simple, traders. Don't try to guess. Have setups. Execute your setups. Manage your risk. Take profits and get off the screen. Keep it simple. Have a great day, and may the markets go with you.